Okay, Rukun's video on Sunday, the 8th of January 2023. It's just gone 1:06 p.m. Chicago time. Do hope you are doing well. And a happy new year to all the Emini-Watch subscribers. I hope 2023 is just going to be a fantastic year for all of you. We've changed locations. We're back in Hawaii on the beautiful island of Kauai. We flew through San Francisco. Spent a couple of days there where they're having dreadful weather. Lucky to get out of that. Here in Kauai, the weather's fantastic, surf's up, water's warm, all of those kind of good things. The only downside is the trading days start super early. But I suppose the good thing about that is you're kind of done by mid-morning and then you've got the rest of the day free. So this is the weekend futures market recap video. I haven't done a proper one of these for a few weeks. The market's been a little bit kind of quiet over the Christmas New Year period. Last week we had some activity, but still kind of needs to kind of settle down and get kind of directionally right. So I thought instead of doing the normal kind of tick bar charts, I would look at the minute charts, which are kind of longer term, where we can see what might be setting up for, let's say, the first 6 months or so of this year. So this chart uses the beta rotation indicator. There's two versions of that on this chart, kind of normalized and not, to look at relative performance of these top asset classes. There are 10 asset classes that we look at using this chart. We've got equities, emerging market equities, we've got bonds, corporate bonds, junk bonds, ags, gold, real estate, oil, and base metals, which is copper. Here in this chart. And just a little note, I'm using a noise cancelling app at the moment on my recording just to see if it can cut out some of the chickens that you can hear in the background. So let's see if that works or not. Anyway, so the beta rotation indicator here, we've got two versions of it, the normalized and non. You can see over the last almost 2 years, the best performing asset class has been crude oil. This is at the top of the chart here, up at 100%. And up until about 6 months ago, everything was kind of falling off in terms of performance compared to crude. But in the last 6 months, we've had a couple of kind of breakaways here. We've got gold that has kind of taken off, and it looks like it's heading towards being the best performing asset class, where it might kind of reach its previous kind of high over here. We've also got ag commodities, so corn, wheat, soybeans, and so on, kind of there in the ags, that's doing pretty well. And then down at the bottom, we've got a whole bunch of other kind of asset classes where it's not clear who the leading ones kind of coming out of this picture are. But when we go through the kind of the minute charts, which are looking at the longer term picture for these asset classes, I think you might be able to see some patterns going on. So before getting to that, let us look at the E-mini. Because that's important to see directionally where we're going. We're going to look at the daily 135 minute, 45 minute and 15 minute charts kind of going down and down in terms of time frames to see if we can kind of get directionally where we might be heading over the first couple of months at least of this new year. This is the traditional beta indicator setup where we have the indicators on two panels side by side. Everything to do with volume on the left hand side with better momentum beneath the price bars showing us a volume based momentum indicator, and then better pro-am on the price bars themselves with blue bars showing professional activity and yellow bars showing amateur activity. On the right hand side, everything to do with price with better sine wave, the plate of spaghetti beneath the price bars here, showing us calculating cyclical activity in 3 different time frames here that allows us to plot support and resistance lines on the price bars themselves, and then breaks of those support and resistance lines give us strength and uptrends or weakness and downtrends. Strength and uptrends painted in red, weakness and downtrends painted in white. And then when both of the volume and price-based indicators are moving together, we get confirmed uptrends in a red background here and confirmed downtrends in this kind of grey background here. So I've been pretty bullish on the Emini over the last several months, and that is because we had a whole bunch of blue professional bars kind of coming at the lows, kind of down here. We'd also had a whole bunch of end of trend signals and cyclical patterns kind of come together here. You can see that's what I call a triple, where everything kind of comes together. We got a pullback to end of trend on the lowest time frame, syncing up with cyclical support on the highest time frame, and a small break above the support on the intermediate time frame. So we had some strength. We came back to test into this low, 3600, kind of down here. We bounced from there, and we've just had a little bit of a weakness kind of going on. Now this weakness I expected to be caught because we've gone into a little bit of a downtrend here with white bars because we broke below the support on the lowest time frame. But sometimes when we've got a good strong trend or a test into this that breaks into a trend, we are caught by the next highest time frame, and we are coming down here on better sine wave with these slightly thicker lines here, the intermediate time frame. When those cross, that'll be cyclically the right time to catch that little break, and actually kind of breaks back above this 4,100 type level. Let's see if that happens in the next few days, or whether it happens earlier than that and this signal kind of catches up later. We're at kind of a critical juncture here. In terms of volume, yes, we've got blue professional bars kind of buying those lows. These amateur bars, they were kind of a combination of kind of up and down here. It would have been nice if they were kind of testing down into those lows, because that would show the amateurs are kind of essentially going short here, expecting the market to go lower. But directionally, we've got it's amateur activity there, but it was kind of end of the year type stuff. So I'm not sure we can read too much into that. But we've had a strong couple of days holding this area and kind of breaking up. We go down to the 135-minute chart here. This is nice exhaustion sell down here, getting rid of some sellers that are kind of wrong-footed because we bounced from there. Still in the downtrend, still got some time to run. That's the resistance on the highest time frame running into support on the highest time frame. So timing wise, maybe got a little bit of time to run. We ran out of steam when the amateurs were pushing this market. This is all the Rambo patterns into those highs, Rambo patterns into those highs. Again, Rambo pattern is potential reversal of an amateur breakout. So that's RAMBO, so amateur activity there. 45-minute chart here, this is better. We're finding a little bit of low here with exhaustion sell bullish divergence. We're kind of going into a little bit of congestion here with the cyclical patterns, and we're starting to break into an uptrend. But no blue professional bars yet here for trailing the stop down. And then if we go to the 15-minute chart, this is the activity over kind of Christmas and New Year, where we didn't do very much. The market just kind of got pushed around in a fairly tightish range. Some professional activity kind of coming in here, selling it down, holding, and then breaking back up through here. So this whole zone has been broken, that congestion zone has been broken, and these blue professional bars are buying the breakout, and we've kind of kept on going. So on the lowest time frame charts, we're kind of breaking into an uptrend. The question is whether this kind of timing is going to be happening over the next couple of days, and this cyclical cross will kind of catch up later on in the week to put in that low. So I'm bullish on equities at the moment, particularly emerging market equities. We might talk about that kind of midweek, but the equities story seems to be quite strong. So there we go. That's looking at the E-mini all the way down from a daily chart to the 15-minute chart. Now let us look at the rest of the futures markets. And these are going to be the minute-based charts where the settings are slightly different based on the different markets. And I'm just going to reference this chart setup spreadsheet that's a Google spreadsheet. So if you're a subscriber to the Better Indicators and you're wondering how all of these kind of settings are decided, this is the spreadsheet to go through. So it goes through each of the futures markets, and it shows you on a day trading, swing trading, or position trading what the different kind of preferred settings that are for each of those different markets, because they're slightly different on these kind of minute charts and tip bar charts. So for these futures markets, each of them trades a different number of hours a day, and what I'm trying to do is have 3 bars per trading day. So for example, gold, we use a 460-minute chart where we have exactly 3 460-minute bars in a trading 24-hour trading session of gold. But in the ags, that's a 367-minute chart for each of the corn, soybeans and wheat, just because they have different trading hours than the rest of these markets. The E-mini, I'm just using the day session, and therefore it's a 135-minute chart. Again, exactly 3 135-minute bars in a day session of the E-mini. So first of all, let's look at that 135-minute chart. This is the Better Indicators all-on-one chart, kind of simplified, where we use the best of the 3 indicators to generate signals here. Long signals are shown with a dotted vertical red line, short signals dotted vertical white line. When everything comes together here, we're oversold with the background printed in red on better sine wave. We've got exhaustion, sell and bullish divergence kind of come in. There's the bullish divergence signal here on better momentum, and the trailing stop with better pro-am is kind of broken to the upside. When all three of those kind of come together, we signal a long signal. So over the last couple of months, we've had a breakaway long signal, and we've had a little bit of test into those lows. What we need is this trend to break back into an uptrend with the bars turning red. So that's what I'm looking for in the next week or so with the E-mini. Now, a couple of weeks ago, I put out a video just talking about Felix Zulauf and his view on bonds. That there was going to be a rally in bonds kind of happening this year, early this year. And I referenced this chart where we're having a whole bunch of signals, triple signals kind of coming in at the lows over the last couple of months. And then Friday's activity was really good. So we get these up arrows, red arrows, when we get kind of additional kind of signs of strength in a market. So we'll get them at breaks of trends sometimes, but when we have a little bit of a test back and we kind of have a resurgence back into an uptrend, here's another sign of strength, and we've broken into an uptrend on the 10-year notes here with the bar turning red here. So that seems like a pretty prescient video from commentary on Felix Zulauf's view. The bonds were going to rally this year. So it's been setting up for a while, and now we've got a real sign of strength on bonds. So that's equity and bonds. The other ones that are looking really interesting at the moment are the Forex charts. So first of all, let's look at the Euro chart here. It's a 460-minute Euro chart. And again, over the last couple of months, we had signals down here. It's classic. Exhaustion, sell, bullish divergence. That's number one, better momentum. We're oversold because the background is in red. And we've been oversold for a while. But this one kind of finally catches, and then we break above the trailing stop that's trailing down the blue professional bars, and we had a whole heap of blue professional bars kind of coming at these lows here at 97. We broke with a signal, we came back in, and here are some nice signs of strength here going in with the red arrows, 1, 2, 3, and then with Friday's activity. We had a nice uptrend, and we kind of, for the last 3 weeks or so, we've just been settling back into a little bit of weakness with the white bars, and then with Friday's activity, bang, pretty explosive to the upside. Now, how far is this market going to go? We don't know, but a couple of things need to happen before this all kind of ends. First of all, we've got to go exhaustion buy. So we've got to have blue dots happening above the price bars to show us an exhaustion buy signal. We also have to be overbought on better sine wave. Well, we've got the first ones of those here with the background in grey, and then we've also got to see blue professional bars, a whole heap of blue professional bars kind of taking profit. So where that happens, we're not sure. But this has been a big downtrend for the euro over the last year or so, coming down from the 120, 125 type levels. So, and we're only at 106, 107 at the moment. So let's see where that goes. I'm actually holding a long euro position at the moment, and that's kind of turning out nicely. It's also happening all the other kind of Forex contracts, which kind of counter the USDs. So first of all, British pound, same thing. We had a signal here, settled down, and then we had signs of strength going on, and then Friday's activity was pretty good. So we've kind of broken away. It's still showing white bars, but let's see if this week that turns into an uptrend. Aussie dollar. Aussie dollar has actually been in a confirmed uptrend all of that time. So we didn't have signals at this point here because this got in the way of the exhaustion buy, but that was kind of getting the move going, if you like. But it's been strong all the time here, and a couple of signs of strength, bang, bang, bang. The market's been in an uptrend, and we're just sitting under kind of 69. And that level there is kind of psychologically important. Let's see if we get nicely into the 70s over the next couple of months in the Aussie. Then lastly, Japanese yen. So Japanese yen, not been keen to trade this over the last several months because there's been so much intervention by the Japanese central bank. But it's in an uptrend. It's above the trading stop with better pro-am. A whole bunch of blue professional bars kind of come in here. Exhaustion sell at that point, so we got rid of a whole bunch of kind of sellers at that point. They either got shaken out of their long trades or they put on short trades at that point there. So that's kind of good to get this kind of market back trending, because that volume eventually needs to get reversed with an exhaustion buy pattern on the upside. So there we go. There's the big ones in terms of markets. I think we're strong on the E-mini at the moment. Bonds have started to take off, and that's been really good. It's also important because at the beginning of the year, the fund managers kind of reassess what has happened over the last year, and they're looking ahead for the next year. And it could be that the bond market is actually going to be stronger than the equity market over this time period because it's been so beat down. They're kind of good bargains to be had. So you can see here the bonds are doing strong, doing well. Equities, I think it's going to break into an uptrend, and we've got all of these kind of non-US markets trading higher. So we've got the euro, British pound, Aussie dollar, Japanese yen, which means that the emerging markets trade is also going to be strong as well. We'll look at that. Now, we saw in our rotation chart that gold had been doing extremely well over the last 6 months, and that's why. Here we go. We had a whole cluster of triple signals going on here, October into November, bang, and a whole bunch of blue professional bars getting this move going. You can see here they just launched into this, launched in again, and then grabbed it again. And so this market is super strong at the moment. So it's gold going higher. And again, this isn't going to top out until we see this type of activity where we get blue professional bars with an exhaustion buy pattern and so on. So we're in an uptrend in gold. The question is, can we grab onto that market somewhere with a nice, on any little kind of weakness going on? So silver, another precious metal, tends to follow. There's our triple signal happening in silver, and we're in a nice uptrend on silver. Bitcoin, well, Bitcoin's been beat down and beat down. We're down at the 15,000, 16,000 kind of level. We have some signals here going on at the end of the year. Blue professional bars, exhaustion, sell, bullish divergence kind of going on. Some signs of strength going on there with the background, with the red arrows. So let's see if this is going to be a turnaround year for Bitcoin, because we've been in a strong downtrend for a long time now. Okay, now crude, we saw, had been the strongest performer over the last couple of years, and I wouldn't say this is kind of weak at the moment, because we've got blue professional bars and exhaustion sell coming in here at 70, and we've kind of come back down. For this to prove itself, though, we need to break back up through the 83 levels. So we're kind of oversold. Would be nice to see some more kind of background printed in red over this period before taking any long trades in crude, and probably some more blue professional bars kind of launching this thing going. But I think there are other opportunities to be had, because the energy sector may not be as kind of productive as other sectors at the moment. And natural gas super weak at the moment, having had a record a couple of years kind of into those highs. We had triple signals going on here. The last blue professional bars that we saw here at those highs. So they caught it at 550, pushed it back up, and then the professionals at $7 said, yep, let's push this down, bang, 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 and we're in a strong downtrend. No blue professional bars kind of come in, no exhaustion sell on natural gas, so natural gas is still weak. Copper, though, copper on the rotation indicator looked like it was strong, and you can see here it has been lining up this year. We got our triple signal back in August. We tested into blue professional bars here, which is good. We took off to the upside here, kind of those blue professional bars, buying a breakout of that channel. And now we're back up, potentially breaking through almost $4 here. That'll turn us into kind of a strong uptrend above $4. So it's interesting that copper's kind of strong, but the energy markets are weak. And again, on the rotation indicator, we had the ags that seemed to be doing quite well. When we looked at this, they'd kind of taken off like gold. But on the daily charts, on these kind of minute charts, I'm not so convinced here with the ags. Yep, it held at kind of 600 for corn with blue professional bars here. But lately we've had blue professional bars into the highs here, and those are kind of selling it down after exhaustion buy patterns up here just under 700. So I'm not so keen on corn there. Let's look at soybeans. Yep, they caught it at 1344, but we're under this kind of shadow of the blue professional bars, and they sold it down at that point, and that's a weak bar on Friday because the close was relatively weak. Let's see if it kind of rallies in soybeans, because we didn't have kind of exhaustion. Well, we had exhaustion buy there, bearish divergence. We're testing into that 1533. That could have been just a fake breakout, and it goes the other way, and the professionals just sold it down. So yeah, soybeans not so good. And lastly, wheat. White bars going on, so we're in a downtrend. The last signal here was into an uptrend, but that failed. And we've got sign of weakness going on here. No blue professional bars, no exhaustion sell. That's exhaustion sell kind of getting the move going. Not unlike the soybeans kind of pattern that we just saw on that last chart. Reaches that high, tests into those highs at kind of 900 and a bit. They sell it down with exhaustion sell pattern signals. So it's like blue professional bars selling it down. So they're selling that market down hard. Let me just show you the same kind of thing going on soybeans. Well, it's not an exhaustion sell signal, but that's kind of selling that market kind of down hard. So yeah, so the ags, although on the rotation indicator it looks like they're kind of relatively strong compared to the other asset classes, I kind of don't see it in these kind of minute charts, but you can start to see it in gold and silver, 10-year notes, equities potentially, and then the forex markets with the euro being a leading, and Aussie dollar kind of leading contenders there. So there we go. Rip through the 15 largest futures markets charts for our weekend futures market recap. Hopefully that was helpful to you. Beginning of the year is always interesting because, as I said, all the asset managers are kind of rotating into different positions and to see what's going on their kind of big picture. So we might kind of have to look at this kind of big picture on a quarterly basis just to check how we're going. But at the moment, for me, happy to be long euro at the moment. I think that's a good trade, and that long 10-year notes trade could be interesting as well for the next couple of weeks or months. There we go. Hope your trading is going well. Looking forward to next week.